Good morning. We're taking a look at gold, and gold had a really good day on Friday, and we saw a lot of buying, and it was institutional buying, so this has pushed the price higher. Now today we've capped at 1933. That is just in front of the 55-day moving average, and that 55-day moving average is coming in at 1942. Where do we see gold going? I can't see any reason why gold can't continue to trade higher. We could see a pullback, but I think that the pullbacks will be captured by the support. And you've got three lots here. You've got the 21-day coming in at 1907. You've got the monthly pivot coming in at 1909. The weekly pivot coming in at 1910. And you've got the daily pivot coming in at 1917. So all around this area here is going to act as really good support for gold. Where would we be wrong in holding a long position? I think if you went down below the 9-day moving average, which is coming in at 1900, so here down to here, I think if we started to break down below Friday's low of 1894, then obviously gold would have a short-term move lower. Now when we look at the fib levels, they didn't really hold at all. We did hold previous support and resistance here. You can see where I'm putting that little blue line here. So we did hold some pretty good support levels, and the move on Friday I think has been conducive of the market going higher. Now this trend line that I've drawn in here, you can see that line coming in here. Today that line is coming in above the 55-day moving average, and that's coming in today at 1949. So that's your upside target, I think. Remember what I've said about the 42 is the 55-day moving average. So around that 40, 42, 49, I think gold is going to have a little bit of a hiccup. If we scroll along here, you can see that you've got quite a glut of tops and bottoms around this area. So I think to break through that trend line would be extremely positive for gold. And then we can go back up. We can test these little highs here coming in at 1973. We've got quite a bit between 1973 and 1978. You've got that high there where we close lower. That high is at 1992. You can see that line there. So, you know, there are resistance levels up at those higher levels, and given that the market is looking a little bit overbought, however the indicators are still pointing higher at the moment. So I do think, I mean, I like gold, as you know, and I always have. So I think for a pullback would give us opportunities to buy. You can't see the monthly pivot point there because obviously they're converged at the 1909, 1910 area. But just bear those levels in mind that I've given you, and also the direction. You know, we are above every moving average apart from the 55-day one. We do need to stay above there. We do. We would like the market, I think, to break above 1950. I think that would be a clear signal that we're going to trade higher to those levels that I talked about previously. If you've forgotten, it's around the 1972 to 1978 area. As I said, I don't see anything negative for gold at the moment. I think Friday's action was quite important. I think you buy dips and look for a break of that trend line. Good luck. I'll catch you on the desk in a bit.